It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm David Ingles with Rebecca Chung-Wilkins in Singapore.
Good morning. We are counting down to the open of markets in Greater China. Our top stories today. Chipmakers leading Asian stocks higher after reports TSMC is planning price hikes. Brent prices back at early June highs as President Trump downplays talks with Iran. AI server components maker Zhongji Innolight preparing to raise $7 billion in what's set to be the biggest listing in Greater China in years. We'll be watching China's AI model makers as Treasury Secretary Scott Bessent announces further scrutiny over allegations of IB theft. And US Secretary of State Marco Rubio set to meet with China's top diplomat Wang Yi, and Philippine President Ferdinand Marcos Jr. will be live at the ASEAN Foreign Ministers Meeting in Manila for you.
Right, welcome to the show and a good morning to everyone joining us across the region. Rebecca and I, of course, will be taking you through a lot of top stories. It's going to be extremely busy these next 2 hours. Really central to all the conversations today is this return of risk appetite to these markets, whether that's this sort of your AI group and that rally we're seeing on the SOX index and obviously the proxies we're seeing here, this part of the world, or this revival we're seeing on the CSI 300. And we are effectively coming off the best 2 days in onshore markets, specifically on the CSI 300, going back to, if you recall, that Avengers live briefing in late 2024 that sparked this massive rally to the upside on that specific group of stocks. So we'll get into everything in a moment, but as you can see on your screens, the Kospi is doing its Kospi thing again. We're up 5% on the benchmark there. Sidecar was activated, by the way, on the Kosjack today because of the large swings we're seeing there. Within the Taiwanese market, just to mention that and flip the page, TSMC is coming up. We're up 2% on the benchmark. TSMC on the back of that Nikkei report that is looking to hike prices by 10% next year. And you couple that with this massive number on export orders, really reaffirming this AI trade. We'll get to that momentarily, of course, on the eco front in Taiwan. Speaking of eco, yeah, the yen, we talked about this yesterday, 162.50. That's a thing of the past because, as you can see, we now have a 163 handle on dollar yen. So, yeah, a 40-year low, and as far as the Japanese currency is concerned, we're pulling back as far as Brent prices go. But the opposite side to the commodities trade today is copper prices and the revival we're seeing there and 1 month highs and the catch-up we're seeing in Shanghai. Speaking of Shanghai, we're looking at futures coming up on your screens. We have a 10-year bond auction today in mainland China, apart from everything else, deals, national team, and what have you. So we are called slightly higher as we go into the Wednesday session. Rebecca.
Yeah, Dave, that's absolutely right. And picking up on that theme there of risk appetite coming back, particularly focused on this AI theme, the fundraising frenzy is continuing apace in Hong Kong. We have component maker Zhongji Innolight seeking up to $7 billion for its share sale. Meanwhile, Moonshot AI also said to be in discussions on a final round of fundraising before its own listing. We're joined now by Bloomberg managing editor for Asia Equities, Lien Ting Tu. Let's get to Innolight first. Potentially the biggest listing in Hong Kong in about 7 years, up to $7 billion. How important is this for that AI capital raising trade?
Yeah, I think it does signal that there is still a lot of investor appetite to back the AI hardware story, despite the huge volatility that we're seeing in all the chip stocks. So as you mentioned, Innolight, $7 billion, and that could be the biggest since Alibaba's 2019 secondary listing. And if it exercises its over allotment, and that would be $8 billion. And, Zhongji also got about $3.45 billion from Cornerstone Commitment settlements already, and that includes long-term investors such as BlackRock, Temasek Hill House. What that means is that those long-term investors are still quite confident in the AI demand for those hardware names. So that definitely sends a very strong signal. What is also to note is that Hong Kong is really becoming a favored fundraising venue for all these Chinese hardware companies, and that is making Hong Kong potentially, Hong Kong's ECM market the busiest in about 6 years.
Yeah, it is amazing to see this extraordinary resurgence, although it's still concentrated in a relatively small pool, and it kind of reflects that difficulty in expressing demand, right, for the AI trade. Yeah. So I want to ask you also about Moonshot AI potentially coming out to listing. How consequential could that listing be?
Definitely one of the most consequential IPOs out of the Chinese AI space. So the company is really having a great moment right now after the release of Kimi K3. It's getting raving reviews, and people are talking about how it's going to stoke memory demand globally. So it's finishing its current fundraising and valuing it at around $32 billion. And immediately, it's looking at another round in August, valuing it at $50 billion. Just to put that into perspective, Zhipu, its peer listed in Hong Kong, currently has a market cap of about $72 billion. So Moonshot is not far behind. So definitely, it'll make Moonshot one of the most valuable AI startups in China.
Okay, one to watch, certainly. That was our managing editor for Asia Equities, Lian Ting, too. And picking up on one of those themes that Lian Ting mentioned, Dave was talking too, busy day. But part of this is about the Hong Kong Stock Exchange and its popularity, particularly with these kind of listings as well, Dave.
I mean, exactly, as Lian Ting was pointing out just now, right? This busy ECM market. In fact, Jefferies is coming out and raising their price target and on the earnings outlook for HKX, given, of course, the second half outlook. So 8% revenue growth. They're also lifting sales growth into 2027. And it's not just Chinese companies, by the way, just to mention, the Chinese companies looking to list here in Hong Kong, right? We also understand that U.S.-based biotech firm Axiom Biosciences is also seeking an IPO here in Hong Kong. Anyway, we'll talk more about these things in a moment here. But yeah, let's turn it back to the AI story. So Treasury Secretary Scott Bessent says the U.S., while open to open source models, is not open to stuff being stolen. So they're looking to investigate allegations that these Chinese AI models may be stealing American intellectual property. Stephen Engel, our chief North Asia correspondent, is here with us to tell us what we know so far about these comments coming through.
Yeah, well, we all know, though, of course, there's a race for supremacy in AI between China and the United States, and we're hearing as well that there could be talks ahead of the Trump-Xi summit. I'll talk about that in just a little bit on the AI subject. But what Scott Bessent was telling Fox News is that he's essentially echoing some of the complaints or the accusations that we've heard from the likes of Anthropic and OpenAI, that they're accusing the Chinese lower-cost open-source AI models that we've been reporting on, and no names in particular, but essentially saying that they could be employing what is known as artificial distillation. It's not about whiskey. It's about a process, just to put it in layman's terms, where a lower-cost, more junior model essentially could then learn from established proprietary large language models like what I just mentioned, whether it's Anthropic or OpenAI and others, and then essentially and allegedly potentially could steal that intellectual property through that process. I won't get into the details of how it's done, as I don't completely understand it myself. But again, these are the allegations.
Who does, to be honest?
That Scott Bessent is reiterating, saying we are going to increase scrutiny of this, and if we find that intellectual property has been stolen by any models that do not own that proprietary information, then they can use the lever of sanctions to punish those parties.
This does set the stage for, 48 hours ago, we thought it was just going to be one meeting between the two presidents in late September. We understand now that they'll be meeting before that. along the same general lines. We don't have a lot of details, but on AI specifically.
Yeah, well, it would be in line with one of the takeaways, just one of the takeaways
Sure.
of Trump's visit to Beijing in May. Essentially, they agreed to start a dialogue on AI, whether that means cooperation or that means where are the guardrails, where's the competition going to be outlined, and obviously what Scott Bessent has just laid out. There's lots to talk about. The world's two biggest economies and the two that are in that race for AI supremacy without having these sort of ecosystems being developed in parallel and in competition with each other. So again, what we're hearing from Reuters is that the two sides have agreed to push forward and establish that dialogue perhaps before Xi Jinping travels to Washington, D.C., which Scott Rubio, by the way, Scott Bessent, excuse me. Marco Rubio has confirmed that the meeting is still in the cards, scheduled for September 24th in Washington, D.C. So that AI dialogue could be used as a preparatory meeting, one, to fulfill their pledges made in Beijing, but two, to sort of lay the groundwork for what is likely to be a top of the agenda issue, AI, when Xi goes to Washington.
Steve, thank you. Stephen Engel, our chief North Asia correspondent. Just speaking of Marco Rubio, we also understand that today in Manila he is scheduled to meet Wang Yi at the sidelines there of the Foreign Ministers Meeting taking place. I believe it's 4 p.m. local time. We'll talk about that and what else is in store today as far as that specific story is concerned. Now, really central to this is Taiwan, right, and TSMC and the export orders we had yesterday, nearly $100 billion for June. And the stock price, this two-day jump, massive move up overnight. You had that Nikkei report we alluded to earlier on, 10%. So we are higher on the Taiwanese session as we go into the thick of the session today. And, of course, Rebecca, we're also hearing, of course, some commentary on this specific move coming through out of our folks at Bloomberg Intelligence.
That's absolutely right. We have this take from Bloomberg intelligence analysts, as you say, Charles Shum and Stephen saying TSMC's potential 2027 pricing plan could support margin upside while extending its prices power beyond wafers to capacity flexibility. So more broadly, TSMC putting a price tag on last-minute production flexibility, turning AI demand volatility into another source of earnings. And that has really been the question. How does TSMC translate some of that uncertainty, some of that laser-sharp focus that people have on that supply chains into earnings, Dave?
Yeah, that's a big question. Not a lot of people, I would imagine, have an answer, if not everyone have a clear answer to really how we get from point A to point B. Well, we'll look at TSMC in a moment. As you can see, we're slightly to the upside right now. Just to mention, too, as far as markets go, the Philippine peso is in focus. So it does seem, based on the latest quotes, we have taken out, past tense, that all-time low level at 61. It's a level that we've been watching, 61.75 flat. As you can see, we are now at 61.75.1. Effectively, that's just academic to say we are at, if not very near, record lows on the Philippine currency. We'll table that for now. Just ahead here and shows U.S. chip stocks staged their biggest rally in a month. That's ahead of U.S. earnings, of course, in big tech there. We're joined by Karin at those times on your screens. We'll talk about that. And, of course, also this Kimi K3 moment, and what that means for that separate part of the ecosystem. That's coming up as we go into the thick of the show today. Counting down to the open of trade. What are we doing now? 17 minutes away from the opening bell in Shanghai and Shenzhen, and here in Hong Kong. This is the China Show. Welcome back. Just to note, of course, the backdrop to the FX markets today, and we talked about the yen 163, 61.75 on the Philippine peso. Weakness in the currency. It's a strong U.S. dollar. Reference rate for today coming through at 679.33 That's the midpoint. 2% either side, of course, is your playground as far as that's concerned. Okay, chip volatility. That's going to be in focus today. It continues to drive equity markets. The FX word is being dominated by, as we just alluded to there, yen weakness. Anthony Stephens is here with us to take us through what is top of his mind at this point in the trade.
Yeah, so we have the chips trade come back on. More importantly, the AI chips and shovels trade. That is much bigger, right? You're seeing that in Japan. You see Murata up 7. You see Taiwan off to a very strong start. UMC, Unimicron up 6 to 7%. And one of the reasons for that is the street came out in pretty vociferous detail about the fact that China LLM improvement is not necessarily negative. That the Chinese themselves will have to continue to build out data centers, and the use cases growing for LLMs will also drive data centers. So this debate remains very live. Volatility is very high, and semiconductor volatility stands out against pretty suppressed index volatility, and that is a dynamic that has been consistent across the region and in the US. So US correlation is very low, dispersion is very high, and that basically drives people even further into this AI trade. It's the one source of alpha that keeps paying despite the volatility, and you're seeing that in Korea, as you guys have touched on. The sidecars keep getting triggered, but so that means people are getting paid for enduring this volatility.
Anthony, people are being paid for enduring the volatility. Still, the involvement of retail investment has changed the game here, right? And the pain that some people are experiencing is particularly pronounced, particularly when we think about single stock leverage ETFs and so on. How do you see that dynamic of the retail investor play in this trade playing out as we do continue to weather some of these storms?
Yeah, so the easiest way to mess up a good fundamental trade is to add leverage to it. And that is what Asian retail has been doing as they've kind of gotten overconfident. And that's been causing some of the drawdowns here. The addition of leverage to what is a very good fundamental picture in the AI trade. So you had margin balances go up in Korea and Taiwan. You had the rise of leverage ETF AUMs. Now, a few of those things have come off pretty materially. So we had JP Morgan on the tapes talking about the fact that the retail deleveraging, at least in Korea, is coming towards the close. You're seeing retail kind of margin balances come off in Korea and Taiwan. In China, for example, that balance is still pretty high. So that is the way we need to look at the retail environment in Asia. It's how much leverage are people taking for the bets they're taking. In terms of more sedate cash buying, Asia is in a much more comfortable place.
Anthony, thank you so much. Anthony Stephens there on what we're looking at very early, of course. And we touched on a lot on what Korea has been doing. In fact, I think we have some statistic for you. So we're July 22, that's 22 calendar days. Let's call it 15 trading sessions on the Korean market so far. And the vast majority, I think with the exception of 2 or 3 sessions, has actually seen the sidecar triggered, whether that's for the Kospi or the Kosdaq index. So suffice to say, it's been extraordinarily crazy, this wild July that we've seen there in Korean markets. Winnie Xu is here with us, our Asia equities reporter, to tell us what all these large and wild swings means here for investors today, Winnie.
Yeah, so, investors, in fact, sentiment has really changed for South Korea, and volatility is such a big role that's playing in this. And as I was talking to investors over the past few days, including today, they have been turning quite bearish. You would imagine that long-only investors don't care too much about volatility if they look at the longer term. But when I talk to Eastspring, for example, they say that, when you look at their one-year performance, even just the past month, because of the volatility, they're really getting hurt. And in that case, they prefer to now just stay on the sidelines and, for example, invest further in Taiwanese stocks because they can get the similar exposure but less volatility. And when I talk to Fidelity, they're also saying similar things, that this extreme volatility is really hurting them and that they have 2 strategies that they play right now. One is that they are controlling their margin, margin size, which means in the past maybe they look at 15% of drawdown, then they buy into the dip, but now they need like 25% or so. And another point is that they are keeping their trading size smaller. So they talked about how volatility has spiked up 3 times since December, for example. But because of their risk management and how their portfolio needs to be structured, they have to bring down their trading sizes to 1/3, for example. So you're really seeing investors looking at different strategies as they manage this volatility. But many of them, for now, prefer to stay away until more of these leverage bets are washed out.
Winnie, Rebecca here. So thinking about some of those investors that are staying away, it is nonetheless true that when we look, for example, the CSI 300 onshore, the best 2-day jump since that big stimulus package announced back in 2024, there are players in the game here. Talk us through what we're seeing when it comes to China's so-called national team.
Yeah, it's quite interesting, I guess, move that we really see from the national team, as it seems to be very, very coordinated and very orchestrated. And in this case, we saw, for example, national team is known to be using these ETFs to stabilize market volatility, and we saw that the biggest, in fact, Star 50 ETF saw record inflows on Monday, and Star 50, in fact, also jumped about 11% yesterday. So with that, you are also hearing these biggest insurers, along with the state-backed asset managers, saying that they are buying more Chinese stocks, funds, for example. And these usually only happen when markets are under stress. Then with that, from the regulator's side of things, CSRC calling these asset managers to come along and to discuss what are the ways to potentially keep the market steady. So you see all these efforts coming through from Beijing to really find a floor to the market, which has saw quite a sharp sell-off last week. We're talking about CSI 300 having its worst week last week in 2 years. So really, we're seeing those starting to pick up with the support from Beijing and to help retail investors to find their confidence in that market.
All right, Winnie, thank you so much for a take. Really quite a setup as we go into the Wednesday session today. Winnie Xu there. Just a brief look at where we are. Hang Seng Index slightly to the downside. A50 futures a touch lower, and of course we're coming off some massive momentum across, specifically, in fact, the Asia market today. We have lots more ahead. This is Bloomberg. Okay, welcome back. So we'll take you straight now to the ongoing briefing in Manila. The Secretary of State, Marco Rubio, there. He's talking about Iran right now and the peace process there. Let's listen in.
It's a very fundamental principle about freedom of navigation. And if that is threatened, then I think the global economy is threatened, and the rules which have underpinned 150 years of international trade and commerce are also threatened. And that cannot be allowed to happen. But as I said, the United States remains open and willing to engage in positive, constructive negotiations and talks, so long as the commitments that are made are kept. And when those commitments are not kept, which is what's happened in this particular case, then there will be consequences. And that has to happen. If these consequences did not exist, then today we would be living in a world where the significant percentage of the energy supply of this region and 20% of the energy supply of the world is being held hostage by a nation state, by a rogue regime who intends to appropriate that and the right of tolling and controlling that shipping to itself, a right they do not have under any definition of international laws, particularly those that govern maritime transit. Among your featured and most trusted partners in each of these endeavors. We're committing to support security in the region through nearly $130 million in assistance to ASEAN countries for demining, which reflects our commitment to the safety of everyday citizens. We recognize that pragmatism underpins programs and activities in ASEAN, and we want to support a safer and more secure Southeast Asia for your peoples. We're also continuing to boost energy security in the region by supporting LNG market development, the deployment of U.S. grid technologies, and support to the ASEAN power grid, building safe, secure, and responsible civil nuclear energy programs, and investing in regional energy infrastructure, including critical mineral supply chains. As ASEAN seeks to implement its ASEAN Petroleum Security Agreement, the United States will continue to stay heavily engaged on energy-related issues. The United States, as I said earlier, and I repeat again, stands with ASEAN, and we're working together to strengthen our economies and our people through forward-looking collaboration that will ensure that the U.S. is your reliable and durable partner for the next 50 years and beyond. So I look forward to our discussion today on the issues that will shape our comprehensive strategic partnership for the years to come. Thank you.
Thank you very much, Your Excellency, for your very clear and powerful opening remarks.
Okay, that was the U.S. Secretary of State Marco Rubio, the ASEAN Foreign Ministers Meeting taking place. This is in Manila, the Philippines, where we understand that later on today, local time, it's 9:30 in the morning there as we pan away quite literally with that shot there. 4 p.m. local time is when the U.S. Secretary of State meets his Chinese counterpart, Wang Yi, in a fairly high-stakes conversation, of course, later on today. Very, very briefly, as we go into the session today, so we are about a minute into the cash market session. Both markets, Hong Kong and mainland China, have opened slightly to the downside. Of course, we're coming off a stellar 2 days on price on the CSI 300. So we're down about a third of 1% in the main benchmark there. The China Index is down even more so, but even as I speak, that we're coming off lows fairly quickly. So we'll revisit what we're doing on price in a moment here. Hong Kong is coming up on your screens, and of course, the big news out of Hong Kong is, well, one is, of course, its pre-IPO funding moonshot at that valuation. And number two is the pricing of Zhongji Innolight, which has also come out with a trading debut date here in Hong Kong. We are, of course, as you can see, seeing a downdraft across those markets. The benchmark here, 2% across the big platform companies, bottom of your screens. A shares on your screens, not about 0.2% on that. ZAI was up 30+% yesterday. Minimax, a couple of minutes into the session, also coming up there to show you what's going on. Okay, let's revisit. Let's turn the page forward, not back. Thank you so much. And it really furthers the AI conversation, right? And I think I'm going to show you something a bit later on, which is quite cool, in fact. So Anthony Stephens flagged this for us, and I think it's interesting given, one, how we're doing in the AI front in China, two, this bounce we're seeing on the SOX index as we go into the thick of earnings season. Chip stocks coming up on your screens. And what I alluded to, the charts coming up very, very shortly, we haven't been this correlated. So we're talking about the China Index, which has been one of the primary ways that investors have expressed the long Chinese AI hardware play of any index out there, and the Philadelphia Semiconductor Index. So in terms of correlation, that's near the highest we've seen in about a decade or so. So these two actually are now going largely hand in hand with each other. Let's talk about these markets next and where we go from here. U.S. earnings, big tech platforms, this Kimi K3 moment. Joining us now is Karin, Managing Director at Guolian Minsheng Securities Research Institute. She joins us out of Shanghai today. Karin, good morning, and very nice to see you again. Thanks for coming on. I think it's been a couple of months since we last spoke. A lot of things have changed. I was wondering if you could start off with, and the big news in China, and a lot of people are talking about it outside China, is this release of Kimi K3. Not to get into the details of the tech specifically, but I'm wondering how it's being received from a market perspective in mainland China, Karin.
Okay. Hi, good morning, everyone. About Kimi and the K3 model, and everybody is excited about this model because we were seeing a real 3 trillion parameter open source world-class model. And also it's ready to use. It's ready to use for all the developers, and it's Chinese version. So, but it also need a lot of inference compute. So a lot of people worry about whether Kimi and K3 and those model they will need less compute. But for the inference compute, it's still need a lot. And for the Asia and the AI, we were seeing like open source always wins. So we are looking forward like on the 27th, the open source for all the developers. And we are excited about the model.
What potentially could be, if not already very early, could be the market implications in the A-share market of this release, Karin?
Yeah, for the Asia market, I think they will anticipate about the market competitiveness and how those model will impact on the really like the intensive competitive in the future. But in my view, I think there's not only one winner. There are a couple of winners in the AI and in the market, because all the like model, they also need a lot of compute and data center, and no one can like own all the compute and all the data center. And their difference from like maybe the coding and the agentic. And I think a lot of like model, they will have their all opportunity, but it also shows like open source and like 3 trillion parameter models can ready to use and ready for all the users and developers.
Karin, markets are becoming more demanding from, AI companies. We are seeing some kind of recalibration. In your mind, is that to do with just a simple valuation reset? Is it to do with fundamental questions over AI monetization? What is actually driving that recalibration, and where do you think that takes us going forward?
Okay, if you like we were seeing, all the market will really focus on the market about this Google, their financial season, what is the return on their capex? Because if you look at market, they are not only like care about capex, they are really care about cash flow and IOI. Because like all those CSP and those big companies, they spend a lot from like 2023, but they earn less. So the market is not like just care about their capex. They're looking forward to see the IOI. So if we like call back on the March, the market really excited about the ARR acceleration since March. And for now, people really are looking forward, like the Google, their like financial report, whether the cloud will acceleration from this season. If they can like seeing a really good acceleration on the Google cloud, I think the market their the reset and also the bump this 2 weeks, 3 weeks. The market will find like a good, like a better optimism in the future, because they were like seeing the really big company, they can make money and they can like have a good return on their like numerous like capex spent all these years. So in my view, I think I'm optimistic about the Google and about the big companies, big tech companies. And also we have to like pay attention to the IR, not only about like Anthropic, but also the OpenAI, because they will impact on the market as well.
And I want to pick up on that optimism point. I mean, clearly investors, and analysts have moved beyond the question of whether or not China can produce competitive AI models. But there is still a question around whether China can build products and full ecosystems around those models. Where do you see the gaps that still exist for China, and where are the biggest advantages?
Oh, if we look at, think about the internet like threats in the past, And Tencent and Alibaba, they were built a great ecosystem, not only China but globally, and they can typically about those product to consumers. And I think talking about ecosystem, I think Chinese internet company did a great and good job. But also we are looking forward to see the enterprise and those ecosystem, how the AI could build a better enterprise ecosystem in the future. They can also make a lot of money. Look at the AWS and Microsoft and also the Google. They are not only focused on the consumer product, but also they are doing great on the enterprise market. So, and enterprise market, those could make more money in the future, typical for AI. So yeah, the ecosystem, not only to consumer product, but we are looking forward. They can also make a lot of money, and the enterprise, they will build up a better AI ecosystem in the future.
Karin, thank you so much for the time. Karin Kong there, Managing Director at Guolian Minsheng Securities Research Institute. I guess that's going to be your next top story, with Microsoft, Meta, Alphabet, among others, reporting, of course, next week. Just very briefly, before we head into a break, just a note here, the Topsports coming off lows, but still, I believe, at these levels, down the most on record. This is down to receiving notice from, well, the company says it's received official notice from Nike that its online sales of Nike's products in China will terminate completely from the start, I believe, of January 1. I would assume that is from next year. Although, as far as offline sales go, Topsports remains committed to working with Nike. Shares are just off a cliff right now, 22% to the downside in the opening minutes. Right, we're live at the ASEAN meeting in Manila as China's top diplomat Wang Yi is set to meet, of course, Marco Rubio. A look at what's coming up with that meeting coming through later today. This is Bloomberg.
Good morning, welcome back. The Iran war top of mind and absolutely in focus as top Southeast Asian, Chinese and Western diplomats are gathering in the Philippines. ASEAN foreign ministers have issued a statement expressing serious concern over renewed hostilities, and they are calling for all parties to exercise self-restraint. Our China correspondent, Min Lo, is at the meeting in Manila. Min, let's kick off with these comments that we've had expressing deep concern around the Middle East from various ASEAN leaders.
Hey, Rebecca, yes, this is one of the key issues that all the ASEAN leaders agree on, and that's that all the parties of the Iran war need to exercise self-restraint and avoid further aggravating the situation. And that's because Southeast Asia, of course, is a big energy importer, and they are price takers as well. They import a lot from the Middle East, and that impact is keenly felt here when it comes to fuel prices, inflation. Right here in the Philippines, just in March, there were protests breaking out because of that, prompting President Marcos to call for a national energy emergency, trying to secure enough supplies of energy, but also basic goods and food, and to prevent hoarding and profiteering. So that's something that many of these Southeast Asian nations are really concerned about. So that's one aspect of the Middle Eastern war. But the other aspect is the security side of things, because the side effect is that a lot of U.S. military assets have been moved out of Asia to the Middle East, and that leaves behind a vacuum here at a time when tensions are rising between China and the Philippines in the South China Sea, between China and Taiwan across the strait, as well as with Japan, right, at the East China Sea. And not to mention, the Pacific is also another area of contest, as China recently launched those long-range ballistic missiles in the Pacific in response to Australia signing this Ocean of Peace alliance with Fiji. So there is a lot of security concerns overall in the Indo-Pacific.
Yeah, Min, we just heard, in fact, just on the on the Middle East topic, we heard from Marco Rubio just now, where you are there in Manila. What can you tell us about just the context and what he said there?
So Marco Rubio just gave an opening speech, and he, of course, reiterated that the U.S. is fully committed, 100% committed to ASEAN at the highest levels, and also saying that the U.S. is open to talks, but he said that Iran is not serious about those talks. We'll be hearing from the Chinese Foreign Minister Wang Yi very shortly. He will also be giving an opening statement. But this is an area where, Southeast Asia is where the great power rivalry contest really shows up, right, as they vie for influence in this part of the world. And of course, the State Department has confirmed that Marco Rubio is going to meet with Chinese Foreign Minister Wang Yi. And there is a laundry list of issues for them to discuss. We just got the headline earlier this morning about the U.S. looking to impose 100% tariffs on generic drugs in 2 years' time unless these companies move production to the U.S. Now, India is one of the largest sellers of these generic drugs to the U.S. But where does India get their ingredients from? A lot of it is from China. So China will be quite indirectly affected by this. And of course, I just was in Shanghai over the weekend where the World AI Conference was taking place. Kimi K3 really took the investing and tech world by took a lot of attention, right? And Scott Bessent, the Treasury Secretary, was saying that he wants to scrutinize these Chinese AI models for any IP theft, as the U.S. has found U.S. watermarks on many of these AI models. So tech also going to be a major focus when Rubio meets with Wang Yi. And of course, the long-standing issues around the trade truce and the extension of Chinese commitments when it comes to rare earth export controls, all of that will be in focus as well.
Min, amidst all of that, we've also had this friction over the South China Sea just over the last few days during the ASEAN meetings. We had comments out of Wang Yi saying the South China Sea issue shouldn't become a stumbling block, warning about that sort of tit-for-tat criticism that we've seen traded between the Philippines and China. Just talk us through where the main point of tension is.
Yeah, this is starting to overshadow the ASEAN Foreign Ministers Meeting, and China is saying this is exactly the intention of the Philippines. Get this, just yesterday, China had summoned the Philippine ambassador, and guess what? The President Marcos also summoned the Chinese ambassador, both sides lodging protests against each other, accusing each other of being the provocateur in the South China Sea. And China's state media has been publishing plenty of editorials saying that this is a familiar playbook from the Philippines. They look for an opportune time where there would be international spotlight, then they create some sort of commotion in the South China Sea, get that international spotlight, play the victim, and get international attention and interference. So China is warning that other countries and that Southeast Asia needs to be vigilant against these sort of external interference, because the U.S. is looking to drive a wedge between China and ASEAN. And China is also saying, yes, it's willing to work with Southeast Asian nations to remove these, quote, disruptive forces, and that, of course, it will work with ASEAN on the code of conduct in the South China Sea. But get this, it's been under negotiation for 20 years, and so far, no breakthroughs yet.
All right, Min, thank you so much. We'll be back with Min later on once we have more information and news coming through out of Manila. Our China correspondent there. Min just talked about it, in fact, here. So, yes, we're talking about tariffs once again. 100% tariffs on generic drugs from, I believe, 2 years from now. More details on that story, in fact, now. Let's bring in Lisa Du in Tokyo for us, our Asia Consumer and Health coverage, who leads our Asia Consumer and Health coverage. Lisa, well, nice to see you. I mean, here we are again. 100% tariffs. What do we know, and when might that kick in?
Yes. So Trump, just a few hours ago, Trump said on Truth Social that there will be a tariff of 100% on generic drugs imported into the U.S. by 2028, and that tariff will increase to 200% a year later unless some of these drug makers can reshore their manufacturing into the U.S. This is coming amidst a slew of other tariffs that Bloomberg has reported that he intends to announce this week. Obviously, he said on his social post that this is to reshore generic drug manufacturing back to the U.S., but he's also obviously seizing on a key topic that he's focused on for the 2026 midterm elections, which is kind of the cost of drugs as an affordability issue.
Lisa, who's going to be hit by these tariffs if they go into effect, and how does that run through to the U.S. consumer?
So we don't have the full details yet on whether this will impact kind of finished drugs or the raw ingredients. But we're talking about finished drugs. Obviously, this will hit global generic drug manufacturers, and especially those in India, which is the biggest supplier of generic drugs to the U.S. A little over a third of all the generic drugs sold in the U.S. are from India. And obviously, these generic drug makers operate on much thinner margins and have much less wiggle room to kind of quickly cut or relocate their manufacturing. And in terms of U.S. consumers, I think some pharma industry executives have warned that if these go into effect, they could really impact the cost of these generic medications, which are meant to be low cost and more accessible. For example, India supplies a lot of contraceptives, drugs for depression and high blood pressure that goes into the U.S., and certainly those you could see becoming impacted by these tariffs.
Bloomberg's Lisa Du, who leads our Asia consumer and health coverage there. We'll have plenty more ahead on what all of those tariffs mean, plus what we're seeing elsewhere with the AI trade. You're watching The China Show. This is Bloomberg.
Okay, the other story we're tracking across these markets, and yes, that's not a typo. That in fact did happen. So yeah, there's no other way to phrase this. We've broken out of what already was a very extreme level on the Japanese currency to hit a fresh milestone that we have not seen in 40 years, since 1986. The exchange rate on dollar-yen is now above 163. And as you can imagine, speculation is now a topic of conversation. And in what way, actually, given rate differentials right now? Certainly one of the topics we'll continue to examine as we go into the second half of the China Show. A snapshot of markets cross assets looking like this on your screens, with the Kospi index still, of course, front and center, 6% in the equity markets, and copper also to mention that 1 month highs on the copper contract. Lots more ahead. This is Bloomberg.
Good morning and welcome back. We are coming back just to the hour. You're watching The China Show, and here's a quick peek at the CSI 300 about half an hour into the session, up around a third of a percent. That follows, of course, that big bump that we had over Monday, Tuesday, the biggest two-day gain since that big economic stimulus package announced way back in 2024. So certainly seeing a return of risk appetite, although reportedly helped by some of that national team buying over the last few days, particularly in that ETF space, Dave.
Yeah, this pickup in turnover, the rescue efforts to stabilize this market, I would imagine a net positive when you look at the price action today. But yeah, I mean, tantamount really to, I guess, what we had back in late 2024 as far as magnitude is concerned. When you flip the page, though, I think when you look at Hong Kong, it's doing the opposite to not just mainland markets, but I think that the rest of the markets too, right? So you have Taiwan, which is continuing the gains and the price hike from TSMC, and we'll talk about that in a moment. In case you missed that, though, so on the eco front, on AI in Taiwan, right, the export orders coming through out of Taiwan, they reported the June numbers late yesterday, nearly $100 billion for the month, the highest ever figure as far as that's concerned. Nikkei's up 2, Topics is also doing quite well. Going into the thick of the session, the yen is not. Perhaps that's also a function of why we're seeing some strength coming through there. In the Japanese markets, the Kospi index is up 6, and of course some of the usual place on your screens. We've barely seen a normal day in Korea, right? So as the graphic at the bottom of your screen is showing, an 8th day that the trading halt's been activated today. And so far this month, we've had 15 trading sessions through July 2022, which is today. Of the 15, 12 have actually seen the sidecar activated either on the Kospi or the Kosdaq index. So it's been anything but calm and normal in Korea, but is this the new normal when you're looking at there? Very quickly, before we just get into the thick of the market action, just to mark Indonesia, which is up and running today, at this point, 0.5%. So would you believe it? We are very near a technical bull market in Indonesia. That's 20% from a low, although I can hear you and I can hear what you're saying now. What do you mean we're in a bull market? We're still 30% down from the recent peak, despite a 20% pickup, and that's also true. Just to split the difference on that one. Okay, let's focus in on the positives. Why not? So David Savage is with us here on set, our MLive strategist. Strong gains in the Nikkei, the Kospi, and Taiwan today. Can this rebound be sustained?
Yeah, today has really been a reversal of what we've seen over the last couple of weeks.
Yep.
The AI hardware picks and shovels trade has really come back on, and we saw you were mentioning Hong Kong has been sort of the laggard, and that's been driven by some of those AI capex spenders. Alibaba is trading lower, and then of course the pure play names, Zhipu and Minimax also declining. So I think that sort of reversal is interesting because typically we see this when you see a factor or stocks really crash lower. You do get a bounce, and so to see this sustain, I think we're going to need to see some normality and return back to those markets, some volatility come down, and if you look at the Kospi, I think today you said on sidecars, I think this is Garfield Reynolds had a post. I think this is now 40th sidecar of the year there. So it's really been anything but normal. But yesterday we saw a bounce in the Kospi and in Taiwan on very low volumes. So I think we're going to need to see turnover pick up on those days where we see up days and not just on the declines.
David, TSMC reportedly toying with the idea now of raising prices. Are you seeing that? How are you seeing that playing out in markets? How does that change the game longer term for investors?
It definitely obviously helped the chip trade in the U.S. session, and we saw strength actually in TSMC early this week, so perhaps front running that move a little bit. On the local shares. I think today it's trading a little bit down or flat. And I think it speaks to that longer term trend that they're able to keep raising prices and really their clients are more concerned of whether they can expand capacity to meet that demand. And so I think TSMC talks about the artificial intelligence mega trend. I think that's really helped to sort of solidify that view. And TSMC has literally been sort of in a class of its own, right? I mean, yes, it sold off very sharply on Friday, but it's only up 3-4% off its all-time highs. That compares to much deeper drawdowns in the likes of SK Hynix, Samsung, the memory trade in particular. So it's really been more stable, and certainly I think traders are looking to that stock to sort of help cushion this overall trade.
David, thank you. David Savage there, out of our MLive team. The take on we just talked about there with David, he alluded to this too, right? You're important and central if the world's top chip designers are literally fighting for attention, for your time, effort, and capacity. In this case, NVIDIA's arguably crowding out some of its peers. That's a separate conversation. Related to this, though, of course, Stephen Cheng out of our BI team have put out a note here on the pricing dynamics taking place. So we're looking at 2027 potential pricing plan. That report we just talked about there out of the Nikkei could support, one, margin upside while extending pricing power. Suffice to say, throw elasticity out the window, putting a price tag on last-minute production flexibility, turning AI demand vol into another source of earnings there. So suffice to say, bullish on the fundamental case as far as the fabs goes on TSMC. Right. If we haven't woken you up yet on the equity market conversation, we have a fantastic one on bonds coming through here. UBP's Anitza talking us through, coming up next on shows here, talking about investors maybe overlooking opportunities in Asian credits. We'll discuss what she means by that, the value across the region. That's coming up. This is Bloomberg.
Welcome back. Now, a look at the yen. It's fallen past 163 per dollar for the first time since 1986, extending its decline and further testing Japanese authorities' resolve to intervene. Bloomberg FX and rate strategist David Finity joins us with more. I mean, it's testing their resolve, but it does look like intervention may have to be forthcoming. I wonder, what effective options do policymakers actually have at this point?
Well, at the moment, it's a good question. It's an intervention. We're certainly in theoretical intervention territory. And we've seen historically that intervention, though, doesn't last long because it doesn't really solve the fundamental problem. So if they did want to intervene again, then I think a lot of traders would go, this is a good chance to buy the dip, if we're honest, and look for the pair to rally back. So I think until fundamental problems are solved, the risks are towards dollar yen moving higher. Particularly, it's going to be interesting seeing, obviously, next week with the BOJ, but it was fully priced in a rate hike later this year. So unless they're more hawkish than that, which is unlikely, you know, the Federal Reserve are looking for 1.5 hikes this year. Sure. If the Federal Reserve sounds a bit more hawkish, particularly given with the increase in oil prices, there's a chance that dollar yen pushes higher. So until the fiscal side on Japan improves or this rate differential improves, you have to say at the moment dollar yen higher is the path of least resistance, should we say.
You touched on it there, thinking about either that fiscal picture changing or some of those kind of key fundamentals. You've got the BOJ, Fed, and so on. Where are these markers? What could change with the fundamentals that would move the needle?
At the moment, well, the market's not thinking anything's going to change, if I'm honest. If you look at option implied volatility, if you look at in terms of even intervention risks, if you look at a chance of dollar yen hitting just 160 over next week, they priced in a 1% chance of that happening. If you look at it, chances of it happening over next month, it's basically just 31%. So as far as the market's concerned, intervention, yes, Katayama keeps mentioning it, but the market's going, you're not going to do it. And they're saying that nothing's changed. So as far as the market's concerned, it's status quo, which basically means realistically a grind higher in dollar yen, you know, at the moment.
Okay. David Finnerty there, our FX and rate strategist. I mean, how quickly can fundamentals change? So overnight, right? So I think the CPI conversation around Japan has taken long enough to change, and then let alone the rate differential conversation. And I think there's a fantastic piece out there that I think we just alluded to with David just now, right? Is it, you know, how effective is any intervention in the spot market, and do we need to go up the swaps curve to actually get something more consequential? Yes, with yields higher, but when you factor in inflation running high in Japan, negative real rates, right? You compare to what you're getting in the U.S., for example, with nominal yields, I should note, on the 10-year actually very close to multi-year highs on the U.S. Treasury yield. So I guess it just goes to show this conundrum and dilemma for Japanese officials. Although it does make, of course, if you want to encourage inflows back into the market and all this money across Japanese asset managers sitting outside Japan, that does make it cheaper, of course, to do so. Now, on that note, right, so we had this conversation this time yesterday in terms of bonds and credit markets and just how it's really been a fantastic first almost 7 months now as far as supply is concerned. We spoke with Rishi Jalan of Citi yesterday, who oversees debt syndication for them, and he does think this momentum we've seen in terms of sales, issuance, whether that's hard or soft currency, continuing into the second half, and really what the risks are to watch out for in as far as that supply is concerned. Have a look.
Last year, we had about 400 billion, maybe just about above that in APAC G3 debt. This year already, we're at closing in on 300 billion, right? So, and while Japan remains the largest issuer group out of that entire market, I think there are other parts of the market that are probably going to make up for it. Now, whether you see that in dollars, euros, yen, we're seeing a pickup in yen and a trend over there as well, is something that's going to be seen. But, you know, to my mind, China still remains a very important player in the dollar bond market. One thing I could see which stops making sense at some point is if you see treasury yields continuing to climb higher. And I think there's no way to predict where those stop. For now in Asia, credit spreads are remaining at all-time tights. The way I see it from now till the end of the year, all things remaining consistent, we should start seeing a pickup in bond volumes like we have in the first half.
Anitza joins us here on set to talk us through the demand side of the fixed income space, head of Asia Fixed Income Research at UBP. And it's very nice to see you. Good morning. I saw you nodding while we played that out. Just your reaction to what Rishi Jalan had to say there.
Yeah, I think it's an interesting market right now because I think, yield is still a very attractive level. Yes, correct. Credit spread has been very tight, but at the same time, most of the return is actually from a U.S. Treasury yield. We reckon that, demand remains really strong. When you look at the market, the supply on the new issue, and they are really, well absorbed by the investors, and with multiple times oversubscribed as well. We reckon dollar space as well as other currencies like non-US dollar are going to be, continue to be interesting going forward. So if you ask me, what are the factors that we need to look at? Definitely, about the US, Fed direction, inflation, US labor market, but we reckon for the rest of the year, U.S. Fed is going to hold the rate unchanged. Okay, the main reason is we reckon the inflation is going to cool down in the second half, such that people would still be very interested in investing in bonds. Yeah. So credit spread, as mentioned, remain resilient. So most of the pickup is actually from the Treasury yield. So whenever the Treasury yield sort of moved up in terms of yield, then I think it's a good opportunity to add some exposure and just be selective. Look at good quality credits. I think the priority for us for the second half will be really to strengthen the carry in the fixed income portfolio.
It's hard to be, it's always good to be selective. It's more difficult when you get all-time. I think the term that Rishi Jalan uses was all-time tightness on spreads. Does high yield make more? High yield has outperformed.
Yeah.
Does that continue? Does that make the most sense for investors? How are you looking at this from a sort of relative value perspective?
I think I would look at it, the overall credit fundamental, overall in the market. When you look at rating actions, actually upgrades is more than downgrades, throughout 2026. And when we look at, different categories, I would prefer high yield. As you mentioned, the credit spread has been pretty tight. So in order to clip a higher coupon, you need to go into high yield. So that's a good selection of high yield, including corporate bond, corporate hybrid, some of them are, in high yield, and also bank AT1s, still interesting. Of course, I've been emphasizing bank AT1, they're between 6 to 7%. Nothing really exciting, okay? Exciting in the sense they are not widen now substantially, but it's still, a good source of carry. So we still have a conviction on all these high yield, corporate hybrid, and also bank AT1s.
Another way of putting that, Anitza, is essentially saying that markets are already pricing in the relatively sort of benign credit backdrop that you're painting here and that kind of tightness. Do you actually see anywhere a genuine mispricing?
Well, I still reckon the credit spread itself, it's worthwhile to be at this tight level because I think demand remains really strong. And also credit fundamentals are also improved, no matter it's U.S., emerging market, as well as in here, in Asia as well. So that's why, I would reckon, there could be factors that make, credit spread wider. But in general, we still reckon that the widening could be, well absorbed if it widen out, from here.
And turning, I think, to US credit, we touched on this. Investment grade spreads, they're already near historic sort of tight levels. Is there any complacency among investors here?
Well, in fact, some investors at this point of time, because they worry about the volatility in the market, so some of them, do look at some of the IG global credit. In June alone, for global credit, actually the issuance is about over 200 billion, but it's still well absorbed in the market. Recently, there has been some mega deal in the market, even though the spread widened out slightly, but we still see strong support. I think that kind of IG names global, it's more for some conservative clients, and I think they will still continue to look at that, given the fact that the yield remain on the Treasury side remain pretty at high level.
Anything interesting in the non-dollar market?
Oh, it's an interesting market. The trend seems to be formed that some issuers are going into non-US dollar market.
We've seen a lot of that.
Exactly. In particular, Aussie bonds. Think about it. RBA has, high rate by about 3 times. And the level is actually pretty attractive. At the moment, a lot of the Aussie bonds are around 5%. You talk about IG US dollar bond, it's only about 4.5%. So that would be something, people interested to look at. I think when you look at non-US dollar bonds, you need to look at the currency as well. As long as the currency has some sort of appreciation trend, which the Aussie dollar is the one, and there would be definitely good demand for the bonds itself. Yeah.
You know what has also an appreciation trend? CNH.
Yes, correct. But then, CNH, the yield is a little bit low, right? So that's why we always talk to our investors that, it's a good alternative to CNH deposit, because you don't particularly have a lot of different alternative investment opportunity in the market. So that's why I think, CNH dim sum bond is still interesting, definitely. It's more for carry rather than anything else.
Is some of that growth that we've seen in offshore yuan bond issuance, is that just a function of funding trends, or are we starting to see a real shift or a more fundamental move towards internationalization of the renminbi there?
Well, I think definitely that would help in terms of the internationalization path for the government to, to make CNH more internationalized. At the same time, we reckon also that a lot of issuers want to diversify their funding. CNH bonds are actually, at a relatively low interest rate, right? So that's a good opportunity for them to lower their funding. At the same time, the investor base is also getting wider, broader. So some issuers, definitely would like to go into that. And in particular, some of the issuers do have a natural need for CNH or CNY in the local market, in the domestic market. So that's also, encourage a lot of issuers, go into the CNY market.
And it's very nice to see you. Thank you so much for coming in. Anitza Nip there, head of Fixed Income Research Asia at UBP. We're about 50 minutes into the cash market session. We're now down about 1%. On the Hang Seng Index, we're the opposite. When you look at the Asia market, even more so across other markets in the region. Lots more on markets coming up. This is the China Show. Okay, let's talk about everyone's favorite topic in Hong Kong, pressing the close button on the elevator. I'm kidding. It's the housing market. So Bloomberg Intelligence has some projections right now of a sustained rebound in the housing market. Secondary homes they're set to jump nearly 20% by the end of next year. So let's call it the better part of 18 months. Patrick Wong is with us here on set. BI's Hong Kong head, to tell us more about the outlook and how you guys came up with this number.
Yes, we work with our data scientists and then come up with a deep dive research report today that's including 50 pages. And then in short, I think it's great to see the opportunities coming. And for the housing market here, we see the rental growth is sustainable. Over the past few years, every year 5% growth, and also the population inflow now again happening with the students coming from university, attract quite a lot of students from mainland or even from other part of the region in APAC. Meanwhile, we also observe the opportunities that the working visa still coming quite a lot. This year, we observe over 100,000 could be sustainable last year or even the year before, and then happening this year again. So it's the population inflow driving the rental growth. And the concern may be the interest rate outlook still not very sure for most people. Having said that, the price we see year to date up over 7%, and then we see this year 11% growth should be achievable. Next year, another 7%.
Patrick, there have been some worries, though, that the sort of tightening that we've seen on capital outflow controls on Hong Kong may impact the property market. I wonder how that would interrupt or affect the thesis here.
True. The challenge, I think, is more about the mainland Chinese demand is still the key message that always driving the demand in Hong Kong for the housing market. Having said that, I think the concern may be overdone. Part of the reason is that, as I said, the population inflow is important, so driving the rental growth. And then the second thing we could see is that the opportunity is coming, is that for the housing market, we also driving is in terms of those are buyers. Usually, over 90%, basically they have Hong Kong ID card. So basically they may already park the money here in Hong Kong. So the capital outflow control, yeah, there's some potential concern. So volume slowing down a bit. But having said that, I think it's more like the price going up a lot year to date. So it's also cooled down a little bit over the past month or so. But the things may also improving, especially summertime is coming, rents is going up faster with students coming. So there's also opportunities coming for Hong Kong.
Patrick, thank you so much. You can check out Patrick and the work of his team in our army of data scientists there with Patrick Wong, and that's of course on the Bloomberg terminal. Fantastic crunching of numbers and perhaps extrapolating where home price inflation could get. Speaking of property, just very quickly, Morgan Stanley's out with a note here on mainland property and some of these names coming through here on a softer first half earnings growth here. So we're down across some, not a lot actually. Could be just a normal retracement and drawdown across some of the prices here across the session. Right. Apart from this, we have lots more to talk about coming through here in the back half of the program here. So number one is this chip rally we're seeing here and is closing in, the snapping back of positive correlation between the SOX index and the Chinex index, which is, by the way, something we don't normally see and how close actually that actually is. We'll have more on what we've seen as far as the data is concerned. Plus, of course, any fallout in the healthcare space on the back of the tariff announcement. Lots more ahead. This is the China Show.
Good morning. Welcome back. It's 11:29 a.m. in Tokyo. Traders heading out to lunch soon. Japanese markets going on a break. Let's just take a quick look. Both in Nikkei and Topix higher, well, just shy of 2% in the Nikkei. And that's, of course, running counter to what we're seeing in the Hong Kong Stock Exchange. And, of course, looking still at this level of the yen. Possible consideration of intervention, though some doubts over really where that does take things going forward. Dave, I'm thinking about lunches. Possibly no lunches for Hong Kong.
Which is funny. So yeah, we put out a piece. We'll get into that in a moment, right? So I think for those who may not be too familiar, I think we used to have a 2-hour lunch break. That's now an hour, I believe. No, it's 90 minutes. I'm confusing myself. But about 10 years ago, they tweaked it twice to the current iteration, which is now an hour. And there's a conversation of just removing that altogether, which is obviously well and fine. That's the prerogative of the exchange. But it's funny how people are complaining when you look at Hong Kong and how fast-paced things are. I have never seen anyone inhale their lunch as quickly as anybody does in Hong Kong. So you don't need an hour to do so. In fact, some of them are done with their sandwich as soon as they're done paying and they're walking back to the office. So spend your time on what? Pressing the close button in the elevator. Okay.
There you go. Exactly.
It's just striking a lot of chords, including myself. Speaking of this manic return into dispersion, let's put it that way. Equity markets, massive rally today. The sizable dispersion within the tech trade that's driving price action. Anthony's here to take us through what's catching his eye at this point in the trading session. Anthony.
Yeah, so we saw the biggest move in the GS momentum long-short basket in 5 years yesterday, and that is really playing through in Asia today. You're seeing the AI chip Showers trade coming back in a really big way. See MediaTek, Unimicron leading the way. And you saw the memory trade come back in a really big way as well with Hynix and Kioxia. And what's happening here is the China model story is going from being a dispersion and a kind of a diffusion event into increasing the GPU and memory demand. The street was very vociferous in saying that this would be increasing the size of the pie for everyone as more people used open weight models for increased AI use cases. So that's the narrative driving markets today and returning some of this positioning into this space. Now switch the board and we look at the Chinese ecosystem. The Chinese ecosystem is not doing too badly. This is a new dynamic that has started to pick up in markets where the Chinese names are starting to keep up with the Korean and Taiwanese names as these two ecosystems develop in tandem. One big difference is that the Chinese companies continue to raise money in Hong Kong or in China in dual listing format. And you're seeing some of that dilution hit Zhongji Innolight today as they plan on doing one of Hong Kong's largest IPOs in the last few years. switch the board one more time to Hong Kong, and you do see the region's biggest laggard. The region's biggest laggard is the Chinese internet companies. And why is that? That is because there is some geopolitical pressure coming in to China now from the US on the usage of distillation or copying, you can call it, of AI models, and what can the US do about it. And that kind of uncertainty is really impacting stocks like Tencent, which has been on a tear recently, and stuff like Z.AI and Minimax. These stocks are volatile at the best of times. They had an incredible day yesterday, but people are taking money off the table given the political uncertainty here.
Very nice. Anthony, thank you so much. Hang Seng Tech, bottom of your screen's down about 2%. I think just to touch on what Anthony just touched on there, it's quite rare you actually see in tandem, right? So you have the Chinex index, which has been one of, I guess, the most popular expressions of mainland bullishness around mainland hardware. And that correlation, this is, I think, 40-day correlation, bottom of the screens, with the Philly Semiconductor Index, that's near the highest in years, in fact, nearly a decade, in fact, that the movement across both benchmarks there. That takes us really into this, what is this future of AI that we're moving into? Is this a bifurcated world, or one where, if you listen to the Chinese president a few days back at the World AI Conference, one where it's a shared future as far as that technology is concerned? That is just to say, this conversation around the U.S. turning up its pressure on Chinese AI developers. You might have heard, we'll get into it now, U.S. Treasury Secretary Scott Bessent says that Washington will closely scrutinize Chinese models for any potential intellectual property theft, to be more specific. They're warning that the U.S. could take further action if its technology is being copied. Joining us here on set is our executive editor for Tech, Tom Giles, to talk us through these comments coming through and put this into context for us. And the timing, too, is interesting.
Yeah, well, right. This came just a couple of days after Moonshot grabbed everybody's attention, sent stock markets around the world spiraling, rekindling concerns about, the wake-up call for Chinese AI. We need to stop thinking of these wake-up calls as sort of one-off. I think we're going to start seeing this much more frequently. Chinese models are getting better. Chinese chips are getting better. Chinese robots are really great. I was just at WAIC in Shanghai, and I saw this firsthand. And so this idea of these one-off, like, oh, DeepSeek moment, Moonshot moment, I think those are going to start to become more and more frequent, and we need to stop thinking them as like these one-off wake-up calls. You can only press the snooze button so many times before you miss the entire workday. So that's something that I think needs to be taken into consideration. Sure, Scott Bessent says we're concerned, we're going to take a close look. By all means, take a close look. Look to see if there's any evidence of what they call distillation, or the idea that Chinese models are borrowing from, taking too much from, OpenAI, Anthropic, and other US-based models. If that's happening, show us the money, show us the evidence. Don't just talk about it. Give us a sense of whether it's really happening, because you have to think about the difference between, is China ripping off the United States, or does China have certain intrinsic benefit, advantages in certain areas? For example, robotics. Just spent most of my time at WAC was on the robotics floor, and
hard to miss.
These robots are getting really, really good at fine motor skills, dancing, moving around, and carrying out industrial tasks. So there are certain advantages that China has in AI. Yes, government subsidies help, absolutely, no question about it. But you also have proximity to the supply chain. You have this, Huawei's getting better at making chips that are a rival to NVIDIA. And you have these models that you can put out at a much lower cost. You're not having to spend as much to get tokens from the Chinese models as the U.S. models, because they're produced more cheaply for all kinds of reasons, including China's investment over time in energy. And so, yes, OpenAI and Anthropic are more advanced in certain ways, but the Chinese are catching up.
Very quickly, although when you look at the valuation, it doesn't seem like they're that close, with, I think, Moonshot at 50 and I think $1 trillion on Anthropic, which is interesting that you were in Shanghai, and of course you're normally based in the U.S. The reality, I think the point you just made is fantastic, that they're just getting better. The models are just getting better. How is that being viewed? where you are based normally?
Well, I mean, when engineers around the world have access and have a choice between a U.S. model or a less expensive Chinese model, we're seeing it showing up in the data that they're leaning on the Chinese models because they're less expensive. You know, token use is costly, and if your company is telling you we're going to start throttling, we're going to start limiting your access to tokens, we're only going to give you so much budget, because again, using these coding tools, using these chat bots is expensive for your company, and if you're going to use them, and you're going to, you want to save money, right?
You want to be economical.
And so, okay, maybe Quen, maybe Kimi isn't quite as good as Anthropic for certain tasks, but if it's good enough for what I need it to do, and it's cheaper, which one am I going to use? And again, we're seeing that if U.S. engineers or engineers around the world have access to a cornucopia of models, they gravitate toward the cheaper ones.
Fantastic analogy I just thought of, right? If you have a coffee machine in your office, if it does the job to get just the basic Nespresso capsule, no offense, okay, just meaning it's more economical, right. It does the job, why do you spend more on, I guess, more expensive brews? Tom, fantastic. Thank you so much for coming here.
Thanks for having me.
Tom Giles there, of course, our executive editor for tech. But really, at some point, you just don't really need to be at the very frontier all the time, Rebecca. There's another big story we're tracking, Rebecca, on... So we're talking Nike and Topsports here. What's going on?
Yeah, that's right. A big drop in the shares today. I think it's now hitting around 22%, essentially off the back of this update that Nike is saying it's going to end the retailer's online sales partnership in China from January. And yeah, absolutely sort of shares off the cliff there. We're joined by Bloomberg Intelligence senior consumer and technology analyst Karin Lim to break down what this means. I mean, clearly pretty big hit for Topsports itself, but just talk us through what this means for the sportswear industry writ large in China, and particularly these partnerships they have.
Right. Nike's this latest move is a fairly big deal for the overall sportswear industry in China. And really, it just highlights the major reset that, the Nike brand will be sold in one of its largest market, and in fact, its second largest from 2027 onwards. So, the question right now is how is Nike going to push consumers to its own flagship stores, etc., which I do believe will be a key channel for the label in China, because online right now is contributing close to 3%, if not more, of most of the sportswear brands' sales in China. So again, how will this actually affect not just Nike, but the overall industry and Chinese brands like Anta and Li-Ning? Because near-term wise, I do think that, there could be disruptions from clearance of activities, some of the channel shifts, etc. Maybe a little bit more of that discounts and sales volatility, which Anta already highlighted last week when it actually provided updates to its second quarter sales. It wasn't the most of exciting sales data they did in the second quarter, and I think we all know that China consumption isn't the brightest spot in the market right now. So this definitely does raise the uncertainty for the sportswear industry in China.
Just quickly, Karin, are there any opportunities that you see coming up? Does this create an opening for any sort of domestic players that may come through here? Or is this really just a consumption story?
Right. I do think that, at this point in time, most of the brands and the consumer firms that we spoke to in the last couple of weeks itself, they are inclined to be more conservative as we actually stepped into the second half of the year. Really, it's about upholding their profitability versus chasing the top line sales, because, at this point in time, even when it comes to discounts, etc., the appetite by the Chinese consumer isn't all that robust. So I think what we're going to actually hear from a lot of companies stepping into the results season will be that, they will skew to being conservative in some of their newer expansion plans. Rather, it is protecting their profitability and making sure that, channel mix inventories for sportswear guys in particular remains healthy so that, they will be in a better position to capture any rebound in consumption in 2027.
Yeah, that sort of elusive rebound still being very, very closely watched. Bloomberg Intelligence senior consumer and technology analyst Karin Lim there breaking down the very latest that we've seen at Topsports. You're watching the China Show. This is Bloomberg.
Iran has been reaching out to the United States, both directly and indirectly, to engage in talks about settling the differences with regards to what's happening in that part of the world. Unfortunately, so far, even though we have reached agreements, they have not kept their commitments. And as the president stated earlier today, I guess, today Washington time, yesterday our time here now, the problem we're having right now is that they're not serious about talks. I'm proud to announce that the United States commitment is being evidenced to ASEAN is being evidenced by action. The United States is now going to, as we announced last year and have been following up in the year since our last gathering, leverage all available tools in our government to strengthen these relations, and that includes on the topic of foreign assistance. As part of that effort, we're delivering $2.5 billion in U.S. government strategic investments in Southeast Asia.
That was U.S. Secretary of State Marco Rubio speaking at the ASEAN Foreign Ministers Meetings in Manila there. Our China correspondent, Min Lo, is at the meeting, joins us now. Min, we just heard those comments from Rubio, really reiterating something of the remarks that came in earlier from President Trump, criticizing Iran for not engaging meaningfully in talks, essentially. That's a concern that we've heard echoed elsewhere. Just talk us through what we've been hearing from Rubio.
Yeah, Marco Rubio was sending a very clear message, right, that despite the Middle East war dragging on, the U.S. is still fully 100% committed at the highest levels to the ASEAN region. And he announced a key investment pledge, about $2.5 billion of strategic investments into this part of the world. That is really to reassure ASEAN nations about how not just U.S. military assets are being diverted from Asia to the Middle East, but also how long is this war going to drag on, and that impact is being keenly felt here, whether it's when it comes to inflation, fuel costs, and of course affecting trade between the two sides as well, given that the Strait of Hormuz has been closed, and that's a vital shipment passageway for many of the goods traveling between ASEAN and the Middle East. So this has been a major concern among ASEAN nations, who yesterday had already put out a statement saying that they're urging all parties to exercise restraint and to not aggravate the situation further. But again, judging from what Marco Rubio said about Iran not being serious about talks, I think the expectations are still pretty low about how we're going to see the end game play out in the Middle East.
So Min, things have already heated up, and we're barely into the Wednesday agenda there. So what's coming up today? Any key specific meetings that we're eyeing more closely than others?
Yes, there are a couple of important meetings that are coming through. Sorry, there was a bit of a disruption because there were planes flying overhead. But we have a key meeting between Marco Rubio and the Philippines foreign minister. There's a meeting between Marco Rubio and the Chinese foreign minister, Wang Yi, as well. And I believe the Chinese foreign minister is also having a meeting with the Philippines counterpart. So a lot of that shuttle diplomacy going on today. Of course, a big issue issue here has been the South China Sea conflict, the confrontation between Philippines and China. Both sides, both China and the Philippines, summoning each other's ambassadors to lodge protests, accusing each other of malicious harassment and provocation. And of course, given that the U.S. had made a statement to condemn China's actions in the South China Sea, China has also said that the U.S. is basically interfering here and turning a blind eye to the continued provocation by the Philippines, and how the Philippines is using this as an opportunity to draw in external forces to drive a wedge between China and the rest of ASEAN. So China is trying to downplay that issue here, but of course the U.S. has a different agenda.
Min, thank you. Min Lo, our China correspondent there in Manila. Speaking of the South China Sea, we'll have more, of course, coming up here on Bloomberg Television on the ASEAN meeting, specifically on that topic on the next program, of course. The International Crisis Group will be coming on at those times in a couple of minutes, in fact, here to discuss the implications and the tensions in the South China Sea. Lots more ahead. This is Bloomberg.